Start the recording. Okay. All right.
Mhm.
But it doesn't matter anyway. So yeah, you can't go back in time. So yes, this is what I do because number one, it's me appreciating everything I taught in the course. That number one, when if I decide to buy stock A, I know that buying stock A, I am taking a medium risk. I know when I buy stock A, there's no guarantee that stock A is going to go up in value. I know that before I buy it. So I already know that. I'm fully aware about the risk I'm taking. I know it's medium risk and I know I'm not trading. I know I'm doing it in the long term. So when I buy it, I'm not buying it with the illusion that the stock is going to shoot up immediately I buy it. So I know that. So I think this is where I'm saying that people, when I keep emphasizing about risk and no guarantees, I know they don't listen to me until it happens to them. So that's number one. I know that I'm doing it long term. I know I'm taking a risk. I know I could lose money and I'm prepared to lose up to 50%. And once I lose 50%, I'm going to sell that stock and realize my loss at 50%. But so long as it doesn't drop up to 50%, I'll leave it alone. And again, that's the other reason why I tend to choose stocks also that pay dividends. So even if it's not gone up in value, at least I'll be getting dividend payment from the stock. So that's why, again, it's taking all these things into consideration. And again, because I also 99% of the stocks I buy value investing stocks, although I do buy the odd one that is might be a growth stock, but the vast majority of the stocks I buy them when they're undervalued. And the case that when you now buy them undervalued, if you're buying a very good company that is profitable and doing well and is currently undervalued, it is not impossible, but it is very unusual for it to then drop 50% in value, if you know what I mean. But that obviously it's not impossible. That can happen, but it really happens in my own experience of buying stocks. So this is where all these things come into play. But so that's why I'm showing you this slide. Um, can you see the screen, Adetola?
Yes, yes.
Yeah. So that's why I'm showing you this slide just to show. And I think I also showed this during the presentation, during the course, but again, I'm sure people forgot about this. So again, again, I emphasize this during the course that there is a risk involved. That this was so just like you two, when the COVID hit, you can see this was the 3rd of April. This was my portfolio on the 3rd of April. So I was buying a lot of stocks when COVID crisis hit. I think I started buying in March. I started buying in March, and you can see a couple of weeks after I bought it, or bought the stocks, you can see my portfolio is all in red. You can see that, can't you?
Yes.
Yeah, but I wasn't bothered. So this is just reality. I know what I'm getting myself to, but I was happy with the choices of the stocks I made. I was happy with my analysis. I was happy with the PE ratio and all that. So uh, once I started seeing these losses, I was, because this is just within a month. I started buying the stocks in March, and within the month they were in red. Again, like you said, I'm not trading. So what am I panicking for? And again, at this point, like I said during the course, and I'm happy you've now experienced this, so you now appreciate what I'm saying now. Because I was saying that at this time on the 3rd of April, only God knows what's going to happen. Isn't that right?
Yeah.
I'm not God. I don't know what's going to happen. But because I went into this with my eyes open, knowing that there's a risk involved, knowing that I was happy to lose up to 50%, and so long as it doesn't drop 50%, I'm not worried. And so on this 3rd of April, when my portfolio looked like this, I didn't panic. I didn't sell it. I wasn't bothered because so long as it's not minus 50%. But again, the key is that I did not know what was going to happen from this day. But I was comfortable with that. And then, of course, this was then on the 30th of April. It improved remarkably. But again, I'm always worried about showing people this because, again, like I said, I didn't know this was going to happen. And it could have stayed red since April up till today, which we are now in October. But again, I still won't be bothered. so long as it doesn't drop to 50%. I mean, luckily, I was lucky and it did well. But I think this is why, again, the key is in your decision making. So I think that's why I try and emphasize is you remove emotions. I'm not tied to any of the stocks. I'm not emotionally tied to Exxon or GlaxoSmithKline or Glencore or JP Morgan. I don't have any emotional attachment to these stocks. I'm non-emotional about them. I just chose them because they were in industries that I liked. I just chose them because they were profitable companies doing well. I chose them because at that time during the COVID, the P ratios were low. And like I said, if they drop 50%, I'll get rid of them. So it's that's why I say once you just put all those factors into play, appreciating risk, understanding risk, choosing your stocks carefully, deciding whether you want to buy them when they're undervalued, overvalued. I think over the last month, I've been going through my stock list with you guys, and you've seen my watch list on the platform. So there are a lot of good companies on my watch list, but I haven't bought them yet because I still feel they're still overvalued. So again, it's not an emotional thing. You know, you've all got the stocks I'm watching on the platform. So they're all on the platform there. So they're good companies, but I don't put emotion in there. So I'm not buying them until I feel they're at a level where I feel comfortable to buy them, i.e. undervalued. And if they never get there, then I will never buy it. So this is just me, it's just no emotion. So now going back to your other question now that I think I've actually posted it on the platform, I posted it on the platform that now that the stock market is dropping because of the second wave of COVID and the American elections coming, of course, all those companies on my stock watch list, I'm going to start looking at them. And if they become undervalued, I'll buy them again, knowing that I might buy them and they might drop further, but I don't mind. So I think that's the key.
Thank you.
Spele?
Yeah. So I'll hang in there. No, but I'm enjoying it. No, it's good. I've learned a lot.
Pleasure.
Thank you very much.
Pleasure. All right, let me just go through the question box. There's a question box here. But if you want to speak to, you can raise your hand and I'll come to you after the questions. Do you have examples of some good shares that are undervalued at the moment? Adebayo, you know I don't give specific financial advice, so you know we're not going to answer that question. You will have to do your own homework and do your own research and find those stocks yourself, so that when you buy those stocks that and they lose money, you won't say it's Remy that recommended that stock to you. You know, I've done the best I can, as in I've shown you my watch list. I've shown you the stocks I'm watching now, currently on the platform. That's the best I can do. At least I've shown you what I'm watching. Of course, they're not the only stocks. You can find some other stocks other than the one I'm watching to watch yourselves, depending on where your interest lies. But yes, I will never go as far and tell you to go and buy stock A or stock B. No. It's from Bola. Good evening. What do you think of British Airways stocks or the sector in general? And that's actually a very good question, Bola. It actually goes to, let's go to the website. Again, this is a bit to what I was telling Adetola, is that it's now down to decision making. It's down to decision making and you deciding what you want to do. British Airways is under IAG. It's not, the company is now under IAG. So British Airways and I think it's Spanish Iberia. They come under the same company, IAG. I think it's IAG. Yes, there you go, IAG, yeah. Now I want to show you something. Maybe this will be a good one for you, Adebayo. But no, I'm not recommending anything. Thankfully, this session is being recorded. So I'm not recommending anything. But this is a good one. No, I shouldn't use the word good. But so Bola, this is IAG. They own British Airways. This is the holding company for British Airways and I think Spanish Iberia. I think let's go to company info. Instead of me just mumbling my words, let's just go to the company info. Okay, there you go. So you can see it says you here that International Consolidated Airlines is an airline that holds the interest in airlines. Anyway, its segments includes British Airways, Iberia, Aer Lingus, and other group companies. So this is the company under which British Airways is under. So if you want to buy shares in British Airways, you have to buy shares in this company, IAG. And of course, by you buying shares in this company, IAG, you're also going to have part ownership. Apart from British Airways, you have part ownership in Iberia, Vueling, Aer Lingus, and whatever companies. So again, this is why it's important to do your homework, as we said, while you're doing your fundamental analysis and find out the details about the company you're buying. Okay, now, obviously, we know that the airline industry is at the rock bottom now because of COVID and flight restrictions and all that. So they're all losing money big time. But we all know that eventually we all have to start flying again. I mean, when the way the world is now, we can't help but fly. You know, people work in different countries, school in different countries, you know, trade, commerce. So I think the airline industry is here to stay forever until the day where you can teleport yourself from one place to another place. Then maybe airlines might disappear. Until that day comes where you can teleport yourself from one place to another, airlines, the airline industry per se is here to stay. Now, the problem is, number one, we don't know how long this COVID crisis will last. Will it be 1 year, 2 years, 3 years? How long will these flight restrictions last? Which companies will survive this horrible period? And so those are all the uncertainties that are facing this industry. You don't know which companies will survive. You don't know how long this downturn is going to affect the airline industry. Would it take 1, 2, 3, 5 years for them to recover? We don't know. Those are all uncertainties. But going back to what I was saying to Adetola, this is an example. Let's go to charts and performance of IAG. Again, I'm using this as an example. I am not recommending anything. This is just an example. But it's just to tell you that, so you can now see IAG. You can see how the share prices have plummeted because it's gone from 443, it's gone from 444 pence and is now 96 pence. I mean, I can't do mental maths. Like I told you, my background is medicine. So you can work out, whoever is good at maths can work out the percentage loss from 444 pence all the way down to 90 pence. So that's a huge drop in the value of the share. And you can see since then it's just plateaued. So if you should buy it. But of course, if you buy it now, you can see it is really hit the rock bottom. So if you buy it at 96 pence, there's a bit unlikely it's going to drop another 50 pence. I mean, it's not impossible to go bankrupt and bust. But this is what you talk about, buying when it's undervalued, buying when the price is low, because the likelihood it would drop 50% again now that is at this rock bottom is unlikely. Not impossible, because of course, like I said earlier, the company can go bankrupt and you lose everything. So again, this is how whoever is going to buy it will have to weigh all those pros and cons and decide whether they want to take the risk and all that. And again, this has to be a personal decision. Go ahead, Bola.
Yes, thank you. I just wanted to clarify, it has got Group SA next to it.
It's got what?
South African stock SA, Group SA ordinary shares.
Yes.
International Consolidated Airlines Group SA. Yes. Is it South Africa?
No. SA doesn't start for South Africa, no.
Okay.
No.
I wasn't too sure when I was looking at it. So
no.
What does the SA stand for then?
No idea.
Do you have a?
No idea.
No idea. Okay, that's fine. Thank you.
You can Google
I'm thinking of getting it of buying some stock within that airline. So I'm still doing my research to see which one I should go into, because if I'm actually looking for long-term investments, eventually, it will go back to 400 and something. I know it has lost about 80%. So
way more than 80%. 444 to 90. That's more than 80%.
So yeah, I'm sure it will go back. Maybe not to 400, but
No, it could go back.
Go back up.
It could, but it could also go bankrupt, and they could go out of.
Yeah, true. Yeah. But because you've got like 5 different airlines together, it's like
I'm not saying you should not buy it. I'm just saying that
I'm just kind of thinking that is one of my own reasoning of
exactly. That's
things I'm taking into consideration.
Exactly. So I think just like Adebayo, like I was saying, I don't give specific advice. I like what you're doing. I like what you're doing is that so long as you do your research, find out about the company, the details about the company. You can see the share price has plummeted, and then you take in everything into consideration. Then you make that decision, and then if you then buy it, if you make money, you will enjoy the money. If you lose money, you will suffer for it. So it's up to you. So to
thank you very much for that.
And then obviously the other option you have is that you can buy an ETF tracking the airline industry.
Yeah, well, I've been thinking of that as well. That at least my risk will be well spread if I do that. Yeah. Okay.
But you're right. Even I have been keeping a tiny eye on American Airlines. In terms of once I see there's a bit of recovery. Again, this is something you can do, just like this IAG. Let's actually go to, like I said, this is not a formal session, so we're just going to play around. So let's go to IAG Airlines. And then let's go to news. So you can just follow the news about the group. That's not good. £5 billion loss for IAG.
Oh gosh.
So like I said, who's going to survive? So you can see BA owner, IAG slashes costs to survive COVID chaos. So I think that's just the problem with the airline industry. This is similar to most
flights. I've got a flight next month and they haven't canceled it. So that's why I'm kind of thinking, their business is still going somehow. Because the other flights I booked with them, they cancel and gave me back my money. But the one I've got for next month to Greece is still
they're flying. They're flying. It doesn't mean they're making money. Big difference.
Okay. Yeah, I know.
That's a big difference. Obviously, sometimes you try and fly in order to hope people will patronize you. I think there was one airline. I don't know if it's Qatar Airways. I don't know. I can't remember the name of the airline, but there's an airline that was advertising a while back, saying that they will give you free flights and also give you life insurance. They'll pay for your life insurance in case you die for COVID flying with them.
Oh my gosh. That desperate. Oh.
Exactly. So all sorts are happening in the airline now. So again, this is again just to remind you that if you're watching the IAG or any company for that matter, once you've done your initial fundamental analysis about the company, what the company is, and all that, and you put it on your watch list and you're now deciding when to buy it, then it makes sense to also keep an eye on the recent news about the company.
Good.
Because
Okay.
this 5 billion loss is not good news. And this is just
No, that is huge.
This is
And
just
I wasn't aware of that news,
Yeah, this
Oh,
is just
9 hours ago.
Yeah.
Okay. That's fine. I wasn't aware of that before. Okay.
Yeah. That's why I
Okay.
wanted to highlight it. That's why I wanted to highlight this to you, just to add to your, when you're watching a stock, keep an eye on the news. And you can see it's just a question of Google and go to news.
Yeah. Okay. Thank you.
Pleasure. Okay, let's go down the question. This is from Ergonosum. Please, how do you calculate return on stock? Again, I can't do mental maths. You're giving me hard work to do, Ergonosum. You bought a GT Bank stock in March at 17 Naira per share and is now 31. So yeah, you just do the maths. I can't do the maths. So you have to do the maths. Obviously, if it went from, let's make it simple. If it went from 10 Naira per share to 20 Naira per share, then that's 100% return on investment, obviously. So if it went from 10 Naira and it doubled to 20, that's 100%. But of course, other than that, I can't do complicated math. You have to bring out your calculator and work that out. That's beyond my pay grade, trying to do this out of mathematics. Oh, Adebayo, yeah, it's good to try, Adebayo. But as much as you try, I won't fall for that. Like I said, my aim is I don't want. Remy said I should buy this stock. Belinda, I bought IAG. Oh, Belinda, you bought IAG in 2016 at the beginning of Brexit and gained 50% in 6 months before I sold it. Oh, well done, Belinda. You got in and got out quickly. 2016, let's see. So you probably did, you were one of those when it was riding high. 2000, let's see. Let's go back to charts and performance. So there you go, Bola. You've got Belinda, who had a good time with IAG. So there you go. That's the 10-year chart. So 2016 was around there somewhere. Yeah. So yeah. So it went up there, and then anyway. But you can now see it's way. In fact, it's the lowest it's ever been over the last 10 years. It's the lowest it's been in the last 10 years. Yeah, IAG. Okbele. Sorry. Okay, any more questions? I think I've gone through all the questions in the question box. So like I said, this is just a question and answer session, no formal presentation. So if there are questions, we carry on. If there are no questions, we'll end the session. It's just for questions and answers, just to give everyone an opportunity to ask. Oh, and by the way, it's a shame Ambi Bola is not on this call. I was going to commend her for the suggestions she made on the platform. Again, that's what the platform is there for. It's not just for me alone to post on the platform. You're all welcome to post on the platform if you find good information, good news, something informative, obviously to do with the financial markets. So don't post things there on dogs and cats and animals and things that have nothing to do with the financial markets. But if you find out any news or any information that is relevant from the financial markets, obviously you're all welcome to post it on the platform. Like I said, it's a community, it's for everyone to use. It's not just for only me to post. You're all welcome to post. And like I said, I like what Abimbola posted yesterday about this site showing macro trends to help you do some analysis on stocks. And I went through the site and it was a very good site, which I also recommend. And I've actually saved it on my web browser because I like the fact that you can, let's just put Johnson & Johnson, which is one of the stocks I'm watching. Just so you can see J&J. So yeah, I like the fact that you can just search a company and you can go and obviously all I want is the earnings per share. You just select the earnings per share and it gives you a trend of the earnings per share quarterly, annually, yearly. So yeah, it's quite good. I really like it. So I was going to commend Abibola for sharing this site with us. Like I say, it's also to use that as to say that yes, that's the site is for everyone. So if you have good ideas like this, good sites you found, good information, do post it on the platform. So apart from asking questions and looking at my posts, you can also contribute, post, anything you find that is interesting that will benefit all of us. It'd be good to post it on the platform. So thanks to Abimbola for this site. Very good site for doing your research on stocks. Is HMCH an ETF? What is H? Found it on Hargreaves Lansdowne. Could not find this. Let me see. So, okay, since you found it on Hargreaves Lansdowne, let's see. HMCH. Yes, an ETF. So, I mean, usually with ETFs, they have ETFs written next to them. So it's an ETF. Don't forget what ETFs are. ETFs, the track ETF, although it's a share, although ETF is a share and classified as a share, but don't forget they track a whole sector. So they track a group of companies, or they track a whole sector which has a group of companies, or a whole stock market index which has a group of companies. So obviously P ratio is not relevant with ETFs when you're looking at P ratio, because the ETF is tracking a whole group of companies. P ratios are only relevant when you're analyzing an individual company. So when you're looking at an individual company, that's where you look at the P ratio to see if it's overvalued or undervalued. But with an ETF, if you think about it, the P ratio is meaningless, because the ETF is probably tracking 10, 20 companies. So how can you, it's difficult to tell the value when you're tracking different countries, the P ratio value. So for example, this ETF you've just talked about, if you go to the top 10 exposures, you can see, they have Alibaba, Tencent, China Construction Bank, China Mobile, all these companies, in fact, these are just the top 10 that this ETF is tracking. So you can see it's tracking quite a lot of companies, and then it's also tracking different sectors. So, it's difficult to then say, okay, you're going to calculate the PE ratio for this ETF. No. So yes, when it comes to ETFs, you can ignore the PE ratio. The PE ratio is specifically for analyzing individual companies. I hope that makes sense, Tebitokwe. I hope that's answered your question. Any more questions? Suggestions, tips, advice? Or we start the weekend? Let's get this party started, right? Oh, okay, good. Tebitokwe, brilliant. Okay. All right. So since there are no more questions and no hands up, we'll end the session now. And like I said, I'll post the recording on the platform once it's ready. But like I said, yes, do contribute and post on the platform if you find anything helpful that would help everyone. So I wish you all a wonderful weekend. Have a good time. Stay safe.